Right. So looking at the economic calendar, we know the report is due out in about 5 or 6 minutes time. We had the Bank of England rate decision that came out at 12 midday. They kept the interest rates on hold, and they're suspecting that the European Central Bank too will keep the interest rate on hold, but we'll see. So that's due to be announced in about 5 minutes. But prior to that, obviously, we said, the market tends to trend sideways prior to the report coming out. We proceeded to trade at the time. Our one trade before the report comes out, where the market took our order. Initially went up, didn't quite get to the halfway point, came back down, then went up again, didn't quite get to the halfway point, then came back down and took us out of the trade. So we're out of that trade. So we're now seeing what we'll do with our second trade. Again, remember, when you start trading on your own, like I always say, you then decide whether you trade before the report comes out or not. Because as you can observe again, the market has been all over the place prior to the report due to be announced in 5 minutes. So again, you make those sort of objective decisions, and then you stick with your decisions. So now we've got 5 minutes before the report comes out. What do? We can still use the support. Obviously, the initial resistance we were looking at, that has been broken. So that initial resistance point there has been broken. So I think we won't bother using that again. And we'll probably be looking more at the first resistance now to trade, to buy. First resistance there is 14,923. So that's one option. So you can just wait till the market gets that far. The other option is to still sell. We can still sell just below the support of the market because that hasn't been broken yet. So we can definitely put a pending sell order at 14,805, pending order to sell. So if the report comes out in 5 minutes and the market falls, we'll be happy to sell if it breaks the support of the market. So we'll sell at 14,805. But the other option we have in terms of buying, we can buy just above the moving average 50 itself. Like I say, usually I don't like to use the moving average 50 to trade prior to the report coming out, because there's always a tendency for things like that to happen prior to the report, where the market will be spiking the moving average 50. So I don't use it before the report. But once the report is announced, and as we can see, there are no more reports of importance for the rest of the day, you can potentially use the moving average 50. And what I tend to do is place my trade 2 points above the moving average 50. But remember, the moving average is called moving average because it moves every 5 minutes. This is a 2-day, 5-minute period. So every 5 minutes, it will change. And we can do that together. So you can see at the moment, the moving average is 14,858. So we can put the pending order at 14,860. And then in 5 minutes, we'll see what the figure is, and then we might edit the order. So we'll go for that to buy 2 points above the moving average 50 at 14,860, and to sell just below the first support at 14,805. Any questions on that? As usual, if you have any questions, you can either click the hand button or send the question through the question box. I'm currently in the surgery, so that's why I've uploaded the YouTube channel with this morning's session, but I haven't uploaded the blog yet regarding the when the market took us out of the trade, but I would upload that later on. I'll just also take a recording of this take a picture of this session to put on the blog too. So you can go ahead and place your orders, place your trades. So like I said, we're going to have a pending order to buy just 2 points above the moving average 50, because you can see the moving averages have crossed there, and the market has also broken average 50 there, and the market is now below the moving average 50, has also broken the pivot point there below the moving average 50, and you can see there's a good gap between the moving average 50 and the moving average 30. So all indications that the market is going down, but so again, I would say don't have a fixed keep falling, then we'll sell just below the support of the market. But if the market turns and goes up, we'll be happy to buy if it breaks. As you can see now, it just changes now 14857. So you have to edit that to 14859. So like I say, you just have to keep editing your order and moving your stop along with the market. There's a question here. Let me just have a look at this question. Just looking at the question. Here we are. It said my MA50 is 14854. That's interesting. Your MA50 is different from mine. Let me just put the cost over this. You can see if you put your cost over the current time, the MA50 is 14857. What's your MA50 now? At this point in time, has anyone else got a different moving average 50 to my moving average 50? Oh, it's the same now. Okay, brilliant. Good. Good. But like I said, remember, every 5 minutes it will change. So, the moving average is a moving target. So again, that's why you have to take all these indicators in relation to what if you've got the time to be in front of your computer all day. Obviously, if you haven't got the time to be moving your pending order with the moving average 50, then it's best you just stick with the support of the market, because obviously the support of the market is a fixed point in the market, so it's not going to move, so you can comfortably put your order there and leave it alone. Same with the first resistance using the pivot points. That's a fixed point in the market. So if you're going to be busy and you're not going to be in front of your computer to be editing your order every 5 to 10 minutes, then it's best not to use that strategy. If you're lucky and the market keeps going sideways and the moving average now descends below the pivot point, then we can then use the pivot point as a point of entry. But obviously, because the moving average is still above the pivot point, we can't use that to buy. But like I say, the market, if the moving average descends below the pivot point, then we can use the pivot point. I wonder Still 1485. I mean, what you could probably do with your chart, see if you can switch it, close your chart down and bring it up again. Hopefully that way you can refresh it and make sure it's not still stuck at 14854. Anyone else with a moving average different from my moving average? My moving average now is at 14857. 14857. Is anyone else got a different moving average from my own moving average? So everyone has the same moving average apart from you, Shakti. Seems as everybody's got the same one with mine. But like I say, you can close your chart down and refresh the page and bring it back up again, and hopefully that might refresh your charts. While we're waiting for the market to make up its mind, I'll just raise a few things just to show you, just to highlight some, because always remember, you can't trade in retrospect. You can't trade in hindsight. And again, I just want to highlight the importance of having a plan, because today, this was actually a good example of how the market can send you on an emotional roller coaster. Because you can see now, you say, okay, I use resistance to trade, and I don't hesitate using it. So, I was going to buy there when it broke that resistance. Now, you could say to yourself, and this happens in real life, and this is where the emotional side of trading gets tough. Because you can say, okay, oh no, I'm not going to trade. I don't want to trade. Then the market takes it at that point, and it moves up, and it's there. You think, oh, I should have taken that trade. You can't trade in hindsight. It's either you have to decide beforehand, because you do not know what's going to happen. So at that point, you say, okay, I didn't take that trade. Then you start to regret it and start to get frustrated. But if your plan is not to do it, then that won't bother you, because that was not your plan. So even if it goes up 1,000 points, then that was not your plan. But it was your plan and you didn't take it, then you now be kicking yourself. Another thing you do is that we said, when it goes halfway towards our target, and halfway was going to be 1906, we'll then move the stop. The stop was 1556. So this again where the market can play havoc with you. So you say to yourself at this point, one, you could have said, oh, I should have entered the trade, and you're kicking yourself thinking the market is going to keep going up and up. That's one thing, because again, you can't trade in hindsight. Two, the market goes up. You can see it then get to the halfway point. You start to see it coming down, then you panic. You quickly move your stop to the opening level, and the market comes down. Then you see it takes you out here, and then it goes back up. You think, I shouldn't have moved it. I should have stuck to my plan. And you start kicking yourself. And then obviously it still comes down and takes you out. But you can see how, if you're not disciplined, you'll just be going to and fro, and your emotions will be all over the place with the market. Have a plan, stick to your plan. Again, I keep saying, I'll never tire of saying it. You are never going to get it right, all the time. No matter what you do, no matter how careful you are going to have losing trades, whether you like it or not. So again, there's no perfect plan. And you cannot trade in hindsight. So you just have to make an objective assessment of the market, draw up your plan, decide how you want to trade, decide what your entry and exit strategies are, decide what sort of indicators you're going to use, when you're going to use them, and then go for it. But if you start thinking that you're going to get one perfect plan and you're hesitant and you then say, I should have done this, I should have done that. No, you can't trade that way. You just have to decide how you want to trade, decide what plan you're going to go with, and then you do it. But I think that's the danger with some traders, is that you're trying to subconsciously devise a perfect plan that would that you will never lose, that you always have winning trades. No, it does not exist, unfortunately. We wish it did, but it doesn't. And again, that is why when you look at the statistics, the statistics show that when you take all the traders from around the whole world, 95% of them are unsuccessful. More than 95% are unsuccessful. So, you get to see that only less than 5% of all traders in the world are successful. And the reason why the odds are hugely stacked against you is the emotional part of trading, because unfortunately when you're trading with real money and you lose it, people start to get frustrated, they start to get angry with the market, angry with themselves, start to change things, and that's really what tends to mess people's trading plan up and them being successful. I think in 2 weeks' time we're going to do a webinar on 15 factors that prevent you becoming a profitable trader, so we'll discuss that in more detail. But you can see, we've highlighted most of all those factors over the 2 weeks. If you don't have a plan, then you don't know what you're doing. If you have a plan, you're not sticking to it, then you're going to fail. If you're not disciplined, if you're not consistent, if you don't apply good money management, all these things will affect your trading. There's a question here. Oh, yes. Oh, yeah, that's a good comment. There's a comment here. Every night your position remains open as your index charts interest. Yes. Especially this is not a big deal for you day trading, because well, if you're swing trading, yeah, that's a huge thing. Usually after 8 o'clock, it's just an arbitrary time that is done by IG index. Arbitrary time, they take 8 o'clock as the end of the day with IG index. So after 8, the next day is regarded as a new day. And if you still have trades rolling over after 8, they will charge you an interest. And the interest is just that they might take 1 or 2 points off you. But I say for day trading, that's not a huge issue. Then those points can add up. But for day trading, it's not a huge thing. But yeah, it's good to be aware of that. Yes, that they do take an interest if they charge you interest. The interest is deducted by points. So say for instance, if you've made 100 points and you roll it over to the next day, you might find actually you might only have 98 or 99 points. They might have taken one or 2 points off. But yeah, it's good to be aware of that. Okay. Any questions before we call it an afternoon? We're going to meet obviously at 8:30 to round it all up. I'll just quickly recap before we go. Like I said, the report has come out. There are no other reports coming out. Like I said, if you cannot stick to your computer and be monitoring the trade and following the moving average 50, please don't use it, because it's a moving target. You can see now is 14,855, so you have to move your order to 14,857. So you have to keep moving it to keep it 2 points above the current level. So if you can't do that, don't use it. Like I said, you can just stick with the first resistance and stick with the support of the market. Like I say, if you come back to your computer later and the market is still going sideways, and by then the moving average has descended below the pivot point, you can then use the pivot point. But at this particular point in time, the fixed points you can use in the market is the support, 14805, just above the first resistance, 14923. Those are the fixed points. And then the moving target is the moving average 50. So you can use the moving average 50 if you can follow it. If you can't, stick with a fixed point. Okay. Any questions? No questions. Brilliant. Okay, so I'll just